You either love him or you hate him. There is no in-between with Elon Musk. He has poured $5 billion into building rockets and launch sites, all with the goal of colonizing Mars. He helped get Donald Trump elected to a second term, and at one point was running operations from inside the White House. He borrowed billions from the Saudi prince, from Larry Ellison and other billionaire friends to buy Twitter for $44 billion, wildly overpaying for a company most analysts valued at half that, all in the name of free speech. He's been accused of stirring markets with a single tweet, crypto, stocks, even his own empire, and yet somehow he runs the most polarizing stock in the 233-year history of the New York Stock Exchange, Tesla. And it's made bartenders into millionaires and burned just as many retirement dreams to the ground. It's the only company where one guy's Twitter post can move the entire S&P 500. One analyst says it's going to $5 and another says $5,000. Even PhDs from Wharton can't figure it out. Not the valuation, not the risk, not even what kind of company Tesla is. As CNBC's Jim Cramer once put it, I don't know whether to value it as a car company, a tech company, or a damn religion. And he's not alone. Tesla defies every market framework Wall Street's built its fortune on. It doesn't follow earnings momentum. It laughs at technical patterns. Instead, it moves on rumors and late-night tweets. Like the time Elon casually tweeted a poll asking if he should sell 10% of his own shares. No earnings report, no press conference, just one cryptic weekend post. And nearly $180 billion evaporated from the stock almost overnight. Or more recently, when Tesla crashed 15% in a single day, its worst drop in 5 years after a cyber attack hit Musk's social media platform X, and his political antics made headlines. That one-day plunge erased over $125 billion in value. That's why even some of the market's best stock detectives won't touch it with a 10-foot pole. Mark Tepper, a $500 million plus portfolio manager and CNBC regular, calls it uninvestable. Danny Moses, the real-life trader from The Big Short, who helped pull off a $700 million trade during the 2008 collapse, says Tesla acts more like a cult than a company. These guys made careers spotting bubbles, scams, and chaos, and they've gotten hundreds of thousands of hours reading the tape on the stock market. Yet even they've given up trying to figure it out. Too erratic, too emotional, too Elon Musk. Most traders gave up trying to make sense of Tesla, but I haven't. In fact, I followed Tesla like a hawk since before the hype train even left the station. My name is Jeff Brown, and I'm a former senior tech executive who spent years running large divisions of companies like Qualcomm, NXP Semiconductors, and Juniper Networks, three firms that now generate over $50 billion a year in revenue and power the critical infrastructure behind smartphones and electric vehicles. I've spent decades working with the most advanced tech on the planet, and I've seen how disruptive innovations break industries wide open and how Wall Street almost always misreads them. That's why I recommended Tesla back in early 2018 when it was trading around just $20 split adjusted. Everyone else thought it was headed for bankruptcy. Since then, it's soared as much as 2,180%. And yet, even after tracking every tweet, every earnings call, every wild swing, I'll be the first to admit, Tesla remains a puzzle. It doesn't behave like any other stock that I've followed. So when a hedge fund legend and friend of mine reached out and said, "I've found something inside Tesla that no one's talking about," I knew I had to drop everything and fly down to Boca Raton, Florida to see it for myself. Because according to him, after dissecting Tesla's every move for the last 5 years, 1,279 trading days later, he found something suspicious taking place beneath the surface. A strange, repeatable anomaly in Tesla's price behavior. Something unexplainable that shows up again and again, and when it does, it's triggered some of the quickest moves he's seen in the 40 years that he's been professionally trading. It's not tied to earnings, not to the news, not even to Musk's antics. It is something deeper, something he says would have never survived 5 minutes on the trading floors of the 1980s. That's why he calls it the Tesla glitch. And in just a moment, you're going to step inside the private trading office of one of the most elite traders alive. We're talking about a man whose hedge fund was ranked in the top 1% of global performance by Barron's. A trader so respected, he has an entire chapter written about him in Hedge Fund Market Wizards, right alongside names like Joel Greenblatt and Ray Dalio, the man who built Bridgewater into the world's largest hedge fund. What sets him apart? Well, he went 20 straight years, from 1990 to 2010, without a single losing year, not one. Through dot-com booms, busts, Y2K scares, oil shocks, market meltdowns, he just kept winning. This is the same guy in 2008 when the world was unraveling and Wall Street was on its knees, pulled in $95 million in trading profits for his fund. His name? Larry Benedict. And he quietly racked up over $274 million in trading gains for his hedge fund clients. Now, for the first time ever, you're getting a rare look inside of his world. Now, you should know, this isn't some flashy hedge fund office or Wall Street movie set. Larry's office feels more like a throwback to the 1980s floor that he started his career on. Phones ringing, monitors flashing, traders locked in. In fact, Larry is still barking out buy and sell orders manually like he's been doing for 40 years. In just a few moments inside this room, Larry's going to expose something he's never shared publicly before. A strange anomaly buried in Tesla stock, one he believes is tied to the same invisible flaw that triggered the 2010 flash crash, when nearly $1 trillion in market value vanished in just 36 minutes. It's a pattern that only appears 1 to 2 times a month and disappears just as quickly. He'll break down why it exists, how it's gone undetected for years, and why Tesla is the only stock out of 7,000 plus where it hits with this kind of intensity. And how, time and again, his system pinpoints Tesla's sharpest moves before they happen. So, let's head on inside. Hi, Larry.
Hey,
Always good to see you.
yeah, see you, Jeff.
I swear, Larry, every time I come here, it feels like I'm stepping into an office that was on the CBOE floor in the 80s. Phones are ringing, as you know, some of your traders are yelling. It's always exciting to be here.
Well, I appreciate that, Jeff. When I left New York for Florida, I didn't just do it for the palm trees. I wanted the movement and energy, screens flashing, orders flying. That's how I've always traded. And after 40 plus years, I don't plan to slow down now.
Old school. Clearly not. And, you've survived every market war zone. Black Monday, the dot-com collapse, 2008, even COVID. But you called me here to Florida today because you said something weird is going on with one stock in particular, one that I know well, Tesla. And you called it the single strangest anomaly you've seen in your entire career. Now that caught my attention.
Well, that's right, Jeff. I don't say it lightly. In 4 decades of trading, I've never seen anything like what's happening inside Tesla's stock right now.
Wow. Okay. Well, you've been trading since the Reagan era and you've never seen anything like this?
Jeff, I want to be clear. This doesn't happen every single day. Sometimes it happens a couple of times a month.
Okay.
But we've been tracking this anomaly over the last 5 years. And when this Tesla glitch strikes, the moves can be explosive. On the days it triggers, we've seen Tesla move 780% more than its daily average.
Well, wait, just to be clear, you're not saying 780% gains.
No, not 780% returns. I'm saying the size of the move,
Got it.
the actual price action, can be up to 8 times bigger than what Tesla normally does in a regular trading day.
All right, Larry. Well, you definitely have my attention. I mean, I told my readers to buy Tesla back in early 2018. I pounded the table, in fact, when it was still trading around $20 a share, split adjusted. And since then, You might imagine it has gone up as high as 2,180%. I mean, Larry, this is a company I know extremely well, all the ins and outs, and I've, of course, tracked every single moment, every development since then. The 2019 Cybertruck reveal, I remember that one when Elon shattered the bulletproof glass on stage, cracked the glass, and it's still racked up over 250,000 pre-orders in less than a week. Or how about the record-breaking Model Y delivery numbers that helped Tesla become the best-selling car in the world? Yes, not the best-selling EV in the world, the best-selling car in the world. Or how about the spike after he changed Twitter's name to X and started calling himself Chief Twit? Do you remember that one?
Absolutely.
The random 2 a.m. in the morning Dogecoin tweets that sent that meme coin flying, or the product launch for Optimus. This was a favorite of mine. The humanoid robot, which was just a human dressed up as a robot dancing on stage. The AI demo day where Tesla unveiled its Dojo supercomputer and laid out its plan to dominate autonomous driving and robotics. Or how about the robotaxi announcement that sent shockwaves through the rideshare industry before even showing the market a prototype? I've seen Tesla move on things that would tank any other company's stock. Elon sleeping on the factory floor, SEC lawsuits, whistleblowers, weird live streams from SpaceX headquarters. I mean, you name it. There is no stock more emotional, more unpredictable, more cult-like. But you're saying this glitch only shows up in Tesla?
Well, Jeff, that's the crazy part. We've scanned for the glitch across thousands of stocks, but nothing else comes close.
Well, it kind of makes sense in a weird way. I mean, Tesla is a monster, 121 million shares a day on average, over 3.5 million options contracts. I mean, that's double Apple's volume, even though Apple's market cap is over 3 times larger than Tesla's. And Elon, the guy averaged 68 tweets a day last year. Sometimes it was as high as 150. I don't know how he has the time. So yeah, there's a lot of noise out there.
That's right, Jeff. It's the perfect storm of volume, volatility, and headlines. But even then, we kept asking ourselves the same question. Why Tesla? After 5 years of tracking it, one thing became obvious. This couldn't have happened back when I started trading.
You mean back in the CBOE pit?
Yeah, in 1984, I was around 21 years old, yelling across the CBOE floor and scribbling trades on a piece of paper. If you wanted to get an order filled back then, you had to physically run it over to the pit by yourself. Trades were handled by people. It was imperfect, messy, and slow. But what we are seeing now is not human.
Are you saying that the robots are taking over already?
Jeff, let's just say this. What I've been tracking inside Tesla stock isn't normal supply and demand. It doesn't line up with earnings report. It doesn't move on analysts' upgrades or downgrades. And it doesn't care what Elon tweets.
Okay, Larry, you piqued my interest. Can you give me an example?
Sure. Look at what happened with Tesla back in March. There was no earnings call, no product announcement, no SEC investigation. Yet out of nowhere, Tesla tanked 15%.
I remember.
That's a $100 billion drop in a single session.
I remember that day. It was their worst day in 5 years. And I had friends asking what the heck was going on. But as you said, there was no major news. Just some vague chatter about softer sales in Germany's minor analyst downgrade. And I think there was some noise about Elon spending too much time in D.C. or something like that. And, you know, that's not enough to wipe $100 billion of valuation off the books of Tesla.
None of that explains a $100 billion nosedive. Now, what happens under the surface is where it gets very interesting.
All right, well, let me guess. You think this was the glitch?
No doubt. We saw the fingerprint. The same setup we tracked across more than 1,000 trading days. A subtle move kicks it off. Then something causes the selling to accelerate. Liquidity disappears.
Like dominoes falling, right?
Exactly. The next day, Tesla exploded higher. If you had placed a simple trade right after the glitch happened, you could have seen a 46% gain in less than 24 hours. If you waited for CNBC or Bloomberg to tell you what just happened, you would have missed the whole move. By the time they figured it out, it was already over.
Yeah, that's what's wild to me. There wasn't even a reason for the drop. There wasn't an earnings miss. There wasn't a tweet storm or a new DOJ raid like the one circling Tesla's autopilot investigations. I mean, unless you were watching Tesla's chart minute by minute, you missed it entirely. So, Larry, let me ask you this, because this is the part that I can't shake. You've got a team of traders and analysts who work alongside you, and you're saying this doesn't happen in Apple, it doesn't happen in NVIDIA, not Microsoft, not even the AI powerhouses like Meta or AMD?
Well, Jeff, that's the thing. We didn't just eyeball a few charts. We went deep. 5 years of data. We ran it on those big names too. This anomaly really only jumped off the page when it came to Tesla.
All right, so you showed me that 46% gain. Now, I'm interested to see what else you've got there, Larry. I'm sure there's something else.
Sure, Jeff. Look at what happened last July. Imagine you open your brokerage account and saw this red chart.
All right, for a one-day Tesla chart, that's pretty ugly.
It sure was. Tesla was getting hammered, down almost 5% before the West Coast was even getting out of bed.
All right, so what happened? Was it a major lawsuit or just Elon being Elon?
Well, that's what I figured, so my team and I started digging. We combed through Twitter, SEC filings, and Bloomberg. We even used AI to sift through every single headline I could find. And all it turned up was a recall notice.
Oh, that's a good one. I remember that. That recall, it caught my attention. But then when I looked at the details, it was a complete joke.
You're right. Tesla said there was a software bug with the hood on their cars. It was all just an issue with a warning light.
Right. And most importantly, there were no crashes. There were no injuries. It was absurd. And it actually wasn't a recall. This is the best part. As you said, it was just a software bug. The beauty of Tesla's technology is that it was able to send out a software upgrade to fix the bug.
Exactly, Jeff. Major outlets like Reuters covered it, but no one made it sound urgent at all. And not a single analyst downgraded the stock off that.
That's it? Some analysts would jump at the opportunity to downgrade a stock if there's even slightly bearish news.
That was it. But by lunchtime, Tesla had lost over $50 billion in market value for absolutely no reason.
Right. Yet it still crashed as hard as it did in October 2022 when they actually missed deliveries and warned about weak demand in China. I remember analysts back then were warning about a full-blown price war, and the headlines were panicked. That was a real reason to sell Tesla stock. That was material news and negative forward guidance. This was barely news.
Well, that's how I knew there was a glitch. You can see the big drop on the chart here. So I was confident it would make a bounce back within the next 24 to 48 hours. Sure enough, look at what happened.
Tesla jumped higher, and it looks like if folks placed a simple trade after the glitch had taken place that morning, they could have turned a $1,000 investment into $2,750 by that afternoon. That's a 175% gain in less than a day, Larry.
Yes, but it wasn't even close to done yet. 1 week later, the glitch popped up again, and a trade could have made 55% in less than 48 hours. A little more than a week later, it happened again. A trade opened on the 22nd. You could have made 200+% return in just 24 hours.
Incredible. $1,000 into all three of those trades within 1 month could have turned into $7,660, and $10,000 into each of those Tesla trades would have turned into an incredible $76,600. I mean, to put that in perspective, someone who bought $30,000 of stock 5 years ago would have made just $10,900 in profit. And I say just as someone who's been bullish on Tesla for years. So what really caused this to happen 3 weeks in a row, Larry?
Well, Jeff, that's the million-dollar question. When a stock drops that fast with no real catalyst, I stop watching the headlines and I start watching the code. And that's when I knew this wasn't driven by humans. This was something else.
All right. Okay. Now you've got me on the edge of my seat, because if this isn't Elon or insider trading or any kind of normal catalyst, then Larry, you have to tell me what flipped the switch.
Well, let me ask you something, Jeff. Do you remember the flash crash?
Of course. May 6th, 2010. Talking about a glitch in the matrix. How could I forget? The Dow dropped nearly 1,000 points for a 9% drop of the entire Dow in under 10 minutes. I remember staring at my screen thinking, are we at war? Have all the market exchange systems been attacked? Does the government know something that we don't?
Well, that's what made it so weird. There was no external trigger, but in just a few minutes, over $1 trillion in market value disappeared. Then it all snapped back just as fast, as if nothing had ever happened.
Unbelievable. I mean, at the time, I remember it. Everyone was blaming some kind of fat finger trade. So like some poor trader at Citi typed 16 billion instead of 16 million on a sell order. And, you remember that turned out to be false.
Yeah, Jeff, that was totally false. That was just a rumor. A few months later, the SEC and the CFTC released a joint investigation, and the real story came out. This was all triggered by a mutual fund based in Kansas trying to hedge their exposure.
Right. This is so incredible. I remember reading about it. They programmed an automated trading algorithm to sell 75,000 E-mini S&P 500 futures contracts worth about $4.1 billion.
That might sound small, but it made up about 33% of the total E-mini S&P volume for the day. The problem was the algorithm wasn't sophisticated. It didn't factor in price, market depth, or execution speed. It was a blunt tool designed to sell everything as fast as possible.
So it unleashed the full sell order into the market like a raging flood, and that triggered the chain reaction of widespread selling.
Well, that was just the beginning. After that, other high-frequency traders picked up on the sudden selling pressure. They started piling in trying to capitalize, which caused things to get even more out of control.
And when the volume didn't stop, those firms got spooked and pulled their buy orders, right?
Yeah, that's what caused the collapse. But here's what I'm getting at. By that point, the market was basically run by machines. 90% of trades were algorithms interacting with other algorithms. No humans were involved, just machines trading with machines, until the system broke and took the entire market with it.
Oh, I remember Procter & Gamble, a stock that normally trades slow and steady in a pretty tight range with very limited volatility. Procter & Gamble dropped 37%. Or Larry, how about Accenture? Do you remember that one? It flashed a trade at 1 cent, just a penny. My jaw dropped when that happened. I mean, I knew at that time it was obvious that there was something seriously wrong. It was like watching a plane nosedive and then the autopilot suddenly yanks it back up.
And that was the first time people realized what we were really dealing with. The machines run the market now.
All right, so you're saying today, compared to the flash crash from 15 years ago, it's even more extreme?
For sure. Back in 2010, algos accounted for maybe half the volume on a daily basis. Now it reportedly is more than 90%, which is the same percentage of algo trades that were happening during the flash crash itself.
But as we know, the technology is far more advanced now. These are AI models. They're making real-time decisions faster than any human could possibly react. We're talking about systems that can detect a tone shift in an earnings call, place an order in nanoseconds, and close the trade before the analyst finishes their question. It seems like we're way past the point of institutions hiring kids from MIT to tinker in their basements. Goldman Sachs, Citigroup, JP Morgan, Wall Street's biggest players are now pouring over $10 billion a year into algorithmic trading infrastructure. They're even co-locating servers right next to the exchanges just to shave off a few milliseconds on trades.
It gets crazier, Jeff. Take a look at these numbers from one of the biggest high-frequency trading firms in the world. Since they went public in 2015, they've profited on 1,277 out of 1,278 days of trading.
That's nuts, Larry. Over 99.9%?
It is pretty amazing. In 2024, they pulled in $276 million in net income. That's about $1.1 million in profits per trading day after expenses.
Well, we have to wonder, how is that even possible? I mean, they must have some kind of unfair advantage.
They're effectively front-running the entire market. Spoofing, quote stuffing, flashing orders. They flood the market with orders they never intend to fill just to see how the market reacts. Then pull them before the execution and pounce on the real trade.
Now, I have to ask, Larry, isn't that illegal to do?
For retail traders, absolutely. But when you've got a billion-dollar firm doing it, they call it providing liquidity. Michael Lewis said it best in the book Flash Boys. He exposed how Wall Street firms rig the market with these high-speed algos.
Well, if you like trading and are fascinated by the markets, I mean, that is a must-read. And yes, I see it on the screen here. Lewis called high-frequency trading a form of legalized front-running that allows firms to profit by exploiting the speed advantage of their algorithms over ordinary investors. And even the Columbia Business Law Review came out and said the lack of human ability to oversee all trades executed by an algorithm makes algorithmic trading both the perfect tool to manipulate markets outside of the vision of regulatory agencies.
Amazing, right?
I mean, they're gaming the entire system, and nobody's watching, are they?
That's exactly what they're doing. There's another study that tracked E-mini S&P 500 futures. It showed that among individual high-frequency trading strategies, which is all software algorithm-driven, just one algorithm-driven account was raking in up to $2.75 million in a single day.
Unbelievable. One algorithm made that much?
Yes, and Tesla is the perfect lightning rod for all of it.
Is that because of the volume?
Well, because of everything. It trades 3.5 million options a day and 120 million shares as well. It's got massive passive inflows, huge retail exposure, a cult following, a volatile CEO, and every hedge fund, quant desk, and market-making bot in the world watches it. So when one algorithm slips, the rest follows.
Oh, I love it. So what you're saying is this glitch, it's like a mini version of the flash crash, except targeted to a single stock, and it's repeatable.
That's exactly what I'm saying. It's AI chasing AI, bots front-running bots. We've tracked this anomaly over 1,279 trading days. It's not random at all. It's patterned. And the deeper we dig, the more convinced I am. This is only possible because of the structure of the modern market.
Well, I see what you mean now when you said this couldn't have existed back in the 80s.
When I started at the CBOE in 1984, everything was done manually. There were no algorithms, no AI, and no milliseconds.
No machine-to-machine trades.
Exactly. This kind of anomaly couldn't have existed. But now these algorithms react to each other in milliseconds. But there's one thing I still trust, even in a world run by algorithms.
All right, what's that?
This glitch may be powered by modern automation, but it still bends to one of the oldest, most reliable laws on Wall Street.
All right, Larry, so what law are you referring to?
That price behavior repeats, that extremes don't last. What goes too far snaps back. Jack Bogle, the founder of Vanguard, once called reversion to the mean a law of gravity in the stock market.
Bogle said that. Well, the market legend who built a $7 trillion empire on index funds, That's about as definitive as it gets.
Well, Bob Farrell, another one of Wall Street's most respected strategists, literally made it rule number one in his famous 10 market rules to remember. Market returns to the mean over time. That line is taped to trading desks across the country.
All right. And you're saying that even in this hyper-automated world, that law still applies.
Jeff, that's exactly what we found. It's the same old behavior, but now it's amplified by AI and these algorithms. So when the snapback triggers, you can get 5 or even 8 times bigger moves in Tesla on a daily basis.
Well, it definitely makes sense. I mean, if a stock's having a normal day, no big headlines, and then suddenly hundreds of thousands of trades hit at once, driving the price up or down out of nowhere, it would have to be the machines pulling the strings.
Exactly. And once you know what that looks like, you start spotting patterns really quickly. In fact, let's play a little guessing game now.
All right, well, let's have a little fun, Larry. I'm ready.
I've got 3 different stock charts here, all from the same exact day, February 23rd. I blurred out the ticker symbols, so you're going to go in blind. Here's what you need to know. One of these companies had just missed earnings badly, slashed guidance, and was getting pounded by analysts. Another one whiffed on revenues and warned on supply chain problems. And the third one, that was Tesla.
All right, well, going off the candles, I guess the one all the way on the right, the smallest drop, so maybe Tesla.
No. The first one, the biggest drop of the day, that was Tesla. Down over 8% in a single session. The other two were Yeti and Lucid.
Oh, boy.
Yeti had just posted subpar fourth quarter earnings, missed Wall Street estimates, and lowered their full-year guidance going forward.
Well, I'm guessing the analysts didn't hold back.
No way. Citi warned the outlook was choppy. The NASDAQ even made Yeti its bear of the day stock.
I doubt the CEO slept like a bear that night. What about Lucid? That's a stock that I predicted a while back would fall more than 80%. I named it as a stock to avoid.
You were totally right, Jeff. Lucid was worse. They reported a 27% miss in fourth quarter revenue, and instead of calming the waters, their CEO got on their earnings call and said supply chain problems were still limiting production.
Ouch. Well, meaning there was delay after delay, the worst thing for a company that's supposed to be pumping out electric cars. Now, I'm sure it was far worse than what was being projected. All right, so both of these companies had clear fundamental problems.
Exactly. They earned their red candles, but Tesla didn't even have a report of insider selling. The only thing on the tape was a boring regulatory filing. And that filing actually said they plan to expand parts production.
Well, that's not even bad news at all.
It certainly wasn't. It was positive news, a sign of growth. Yet somehow Tesla dropped harder than the other two companies that actually disappointed Wall Street.
That is wild. So what happened to Tesla after this glitch? I have to know.
After closing down 8%, Tesla exploded the very next day, allowing anyone who placed a simple trade later that afternoon to turn $1,000 into more than $1,500 in less than 48 hours.
Not bad for a boring day in the market without a single catalyst.
We've tracked the Tesla glitch across years of data. The pattern holds through bull runs, flash crashes, and all of it.
Right, but I know you're not just scooping up Tesla anytime it dips just a little. So, Larry, how do you tell the difference between a normal red day and an actual algorithm-caused glitch?
Well, Jeff, we built a system to quantify these glitches.
You mean an actual formula?
Yes, based on something we call a Z-score.
Z-score, that's statistics, right?
It is. Historically, it's one of the most reliable ways to spot when something's gone off script. The formula tells you how far today's move deviates from Tesla's typical behavior, and when that number exceeds plus or minus 2 standard deviations, you're looking at an event that should only happen about 5% of the time.
So a z-score that declines more than 2 standard deviations means that Tesla just did something it almost never does.
Jeff, and that's how we know it's a glitch.
Right.
It isn't some new trick we made up. Z-scores have been around for over a century.
That's right. Weren't z-scores originally created to spot broken machines in factories back in the early 1900s?
That's right. But then Wall Street realized it could use the same metric to spot financial anomalies before they blew up.
So you're saying if investors had followed the z-score instead of blindly trusting Wall Street analysts, they could have dodged some of the biggest financial disasters of our lifetime?
Absolutely, Jeff. Take Enron. By 2000, it was the golden child of American capitalism, up over 500% in just 5 years. But behind the curtain, the company was a ticking time bomb. And months before everything blew up, the Z-score was flashing red.
All right, well, that's wild.
And Jeff, the same thing happened in Lehman Brothers. Everyone said the 2008 collapse came out of nowhere, but their Z-score tanked well before the media caught on.
So now you're using it not to predict a collapse, but actually to catch a rubber band move in the other direction.
Exactly. It's the same tool. We just adapted it to track Tesla's behavior, calculating the average daily move and the standard deviation over a long sample. Every day we convert the price action into a Z-score. If it crosses below 2 standard deviations with no major news attached, that's our opportunity to pounce.
Interesting. So can you give us an example, Larry?
Sure. Let's go back to October 2022. The S&P was in a bear market. Inflation was running hot and rates were climbing fast.
I remember tech stocks were breaking down across the board, too. I mean, it's painful. Meta was down something like 60%. I remember NVIDIA was off nearly 65%. Amazon had dropped more than 40%. Even Apple, which is usually a flight to safety name, had fallen nearly 25%, wiping out over $600 billion in market value. And of course, Tesla had been playing how low can you go for weeks. Elon was elbow deep in his Twitter acquisition drama when he realized that Twitter was misrepresenting the number of real users. I mean, that was a major discovery. And he was rightfully renegotiating the price and almost pulled out of the deal. And in the end, he decided to suck it up, pay the $44 billion, and focus on cleaning up the mess at Twitter.
That's right. And analysts were worried that Musk was distracted.
Oh, man, I remember the narrative. I mean, they were worried about Tesla's margins, demand, even factory slowdowns.
And on Friday, October 14th, the stock got absolutely hammered, falling 8.5% by the close.
And this time, there was no front page story either, was there?
No, this time there was nothing at all. But whatever the reason was, something tripped the wire, and the move registered a Z-score of 2.4, meaning Tesla's drop that day was so extreme, it fell into the bottom 2% of all trading days over the past 5 years. But take a look at what happened after the glitch was triggered. Everyone who placed a specific trade before the market closed had the opportunity to cash out with an 86% gain in just 3 days.
So, Larry, obviously, to get an 86% gain on Tesla in just 3 days, that has to be from trading options, right?
That's right, Jeff. With the strategy, I don't just buy the stock and hope it goes up over time. I trade the moves. Options let me do this with a fraction of the capital.
Well, you don't have to convince me why options are so powerful. But even in 2025, a lot of people think options are risky and far too complicated. So I have to ask, what do you think about that?
Well, I know a lot of people are scared of options, but there's no need to be. You used to play football, right, Jeff?
Yeah, back in high school, definitely.
So you know how important weight training is.
Well, every team that wins the Super Bowl has a dominant offensive line, and those guys didn't get there by skipping the weight room.
Exactly. But what happens when someone lifts weight with bad form?
Well, they're probably leaving the gym in a stretcher.
Right. But we don't blame the weights, do we? We blame the approach. It's the same thing with options. They can hurt you if you trade them recklessly, but if you're disciplined, they actually are safer than stocks.
That's a big claim coming from a guy with your achievements.
Think about it. If you buy 100 shares of Tesla stock at $200, you've got $20,000 tied up. If it tanks 10%, you're down $2,000 fast.
That's right. And then you're stuck holding the bag, waiting for the stock to get you back to break even. And, with some stocks, that could take years.
But with options, I can trade with just a few $100s, and that's the most I can lose. My risk is clearly defined from the start.
So your downside is capped, but your upside is still wide open.
But with options, I can trade just a few $100s, and that's the most I can lose. My risk is clearly defined from the start.
So your downside is capped, but your upside is still wide open.
Exactly. Take that 86% Tesla glitch winner I showed you earlier. The stock itself only bounced 7%. That's the power of options. I had only had to risk a few $100s, and it could have turned into something almost 10 times bigger. That's the kind of move you just don't get with stocks.
Well, I will say, for a guy who went on to manage over $900 million, had your hedge fund ranked in the top 1% globally by Barron's, managed money for the Royal Bank of Canada, the Bank of New York, even the Saudi National Commercial Bank, and went 20 years without a single losing year. Remarkable, Larry. You have definitely got the track record to back it up.
Oh, thanks, Jeff. I appreciate it. That track record didn't come from being right all the time. As you see, many traders obsess over win rates.
But if your winners average 5% and that one loser wipes out 30%, you're going to be losing money, right?
Exactly. You know Stanley Druckenmiller?
Well, of course. He's the first trader Jack Schwager featured in the new Market Wizards. That was the earlier edition. Your chapter came in the next book. Schwager went around interviewing the best traders in the world, and both of you made the cut.
Yeah, he's one of the greatest. In the 1990s, he made over $2 billion on a single trade using options. He compounded returns over 30% a year for decades. He built a net worth of more than $6 billion. He once said something to the effect, it's not whether you're right or wrong that's important, it's how much money you made when you are right, and how much money you lose when you are wrong.
Well, that is such a simple concept, but so many traders still miss it.
It wasn't perfection that kept me consistent for 2 decades. It was controlling risk every time I put a trade on. That's what options let me do better than anything else. You define your downside, you size the position right, and when the setup hits, especially something like the Tesla glitch, a small move in the stock can turn into a big win without putting your entire account on the line.
That's such a great insight, Larry. It sounds like a perfectly measured approach. That's kind of crazy to think about when so many people out there see trading options as infinitely risky.
Right. And I can't think of a more perfect example than what happened in April.
What day was that?
Monday, April 8th, Tesla dropped nearly 5% from around 233 all the way down to 221.
Well, that's a pretty nasty dip for a company that size. Well, what was the headline? Some kind of leak?
Not a single thing. The only chatter was recycled noise, something about Musk advising Trump.
In other words, nothing new, huh?
Correct. Nothing should have moved the stock like that. Our model actually registered this one as a Z-score of 2.
So that puts it right on the edge, basically in the most extreme 5% of trading days over the last 5 years.
Right. That was our cue. A glitch was taking place. And by now, you should know what happens next.
I do. It snapped back hard.
Yep. The very next day, it ripped 22% higher. Sure, you could have bought the stock after the glitch and risked $221 a share. But here's the thing most people don't realize. Even if you had just wanted a small position, you still are tying up a lot of cash to get that kind of return.
Well, give us another example, Larry.
Let's say you put in $2,000. That gets you maybe 9 shares. Even after a jump of 22%, you'd be up only $440.
Well, I'm sure a lot of folks watching would actually be thrilled to have a clean trade like that once a week.
No doubt, Jeff. But here's the part that catches everyone off guard. With options, you didn't need to tie up $2,000 to make $440. You could have done it with just $133. That's less than a tenth of the cost, and still walk away with the same $440.
And another example, what happens when you put the full $2,000 into your trade?
Well, now you're not making $440. You're flipping that into a 300% return, turning $2,000 into $8,000.
Yeah, you'd be crazy not to take advantage of options with returns like that. But wait, that reminds me of something. Larry, don't you need like $25,000 just sitting in your account to even work with options like this according to the pattern day trading rule? This is known as the PDT rule.
That's the rule for day traders, people jumping in and out of trades all day.
Right.
But that's not what we're doing here. With the Tesla glitch, you're not going to trade every day. You're waiting for a specific setup that only happens 5% of the time. It happens maybe twice a month on average. That means you're not subject to the pattern day trading rule. You can start with whatever amount you're comfortable with, even a few $100s.
That's fantastic. So let's get back to what's causing this Tesla glitch that we talked about earlier and how artificial intelligence has gotten so advanced in just a few years. I mean, it seemed like AI could barely do simple tasks 2 to 3 years ago, and now we have Jeff Bezos testing humanoid robots delivering packages door to door in San Francisco. Not in the future. I mean, Larry, this is happening right now. So if AI is so advanced and there is so much money on the line, how do these glitches even happen?
Jeff, you're right. AI is advancing fast, but speed and intelligence aren't the same thing. Just because a machine can act in microsecond, that doesn't mean it understands what it's doing. Even Bloomberg pointed this out. They basically said machines are only as smart as the humans who program them, and that these algos can suffer from the same weakness as a human brain.
And by weaknesses, is that referring to how Wall Street algos are built by teams of quants trying to predict what might happen based on historical patterns like order flow or technicals or even sentiment data scraped from social media?
They all rely on one thing, rules. And when everyone is running similar sets of rules, weird things start to happen.
Well, that makes sense. And it sounds like it's a dangerous echo chamber.
That's right. One algo starts selling because of a short-term signal. Then another picks up on that selling pressure and sells too. A third kicks in and tries to front-run the second. Before you know it, they're all tripping over each other, pushing the stock in one direction without any real-world reason.
It's hard to believe this is even a real thing, but I guess this is just the world that we're living in right now.
We could spend all night going over real examples. Look at what happened to Citibank in 2022.
Oh, what a story that was. A Citi trader accidentally triggered a $444 billion order instead of a $58 million order and shook up the entire European market, right?
Yeah, and unlike the flash crash, this time it was a human mistake. But what made it dangerous is how these algos amplified it.
Oh, I know where this is going. Bots reacted in milliseconds and things spiraled out of control. And that's not just my theory. Jonathan Hall from the Bank of England issued a serious warning about this. He said AI could magnify market shocks and undermine financial stability. That is a top-level regulator saying the quiet part out loud. I mean, it seems like even the biggest institutions can't fully control their own systems anymore. There are just too many of them. And it's not hard to see how this kind of glitch could hit a stock like Tesla, the most watched, most traded name on the entire market, and deliver gains of 46% in 4 days after the glitch, 65% 24 hours later, 171% in just 2 days. 228% 3 days after the glitch triggered, and even 300% in just 3 days. Now, let's all be adults here. I mean, not every trade's going to go up 228% or 300%, and no one wins 100% of all of their trades. But with this kind of risk to reward setup, you don't need to be right every single time. One or two of these could make your whole month, sometimes your whole quarter. So now, Larry, you could keep showing me more and more examples like this and charts, but everything that you've shown us is pretty undeniable. And honestly, most regular people that I speak with would start seeing real results if they just blocked out the noise and focused on one simple thing. Well, that's what I love about this Tesla glitch you've discovered, Larry.
It's funny you say that, Jeff, because that's actually when everything changed for me.
What do you mean by that?
I don't always have it figured out. My first couple of years as a trader were a full disaster. I got fired so many times, I stopped telling my family where I worked.
Well, I mean, that's hard to believe considering everything that you've accomplished with your career.
Well, I wish I was kidding. I'd land a job, sit down at a desk, and think, this will be the time I'll turn it around. But before I knew it, I'd be chasing the next hot trend, some IPO tech darling, or a copper stock that someone whispered about in the elevator, and I would end up getting crushed again and again and again. One time, I lost $16,000 in a single month.
Oh, no. And back then in the 80s, that could have been a year's salary, right?
Well, it was especially painful when I was trading my own capital.
That had to mess with your head.
It did. You start wondering if you're just not cut out for it. But I knew I could do this. I didn't have a system. I didn't have a discipline. I was doing what a lot of other traders do, trying to trade everything under the sun without understanding anything in depth.
All right, so this has got to be important. What changed?
Well, I finally got a break. I started working for Spear Leads and Kellogg, and they asked me to specialize in the XMI, the major market index.
Ah, a specialty. Now that sounds familiar, Larry. That's exactly why I came to you about this particular trading strategy. You know my background. I'm always focused on growth-related assets and, of course, technological trends, not necessarily on options trading strategies.
Well, Jeff, it was the best thing that ever happened to me. For the first time, I had a focus. I couldn't wake up and just decide to trade whatever I felt like trading that day. I had one product to worry about.
That's right. And when you focus on one sector, one security, day in and day out, you start to understand it more deeply.
You start to understand its rhythm. You know when something looks off. You can feel shifts before they happen. That's when the trades start really clicking in.
Well, that was the moment that your career turned around, right?
It saved me, Jeff, for sure. I learned to specialize. I learned to cut out losers fast. I learned how to read order flow and manage risk. That's when I finally started making real money.
Well, and now, 30-something years later, you're doing it again with Tesla. Now, what's wild is this might be the most chaotic market environment that we've ever seen. It's not been reported much at all because everything going on in the economy and the world, but in just the past year, we've seen a record-breaking flood of everyday investors jump into the game. According to Goldman Sachs, U.S. households have poured nearly $20 billion into stocks over the past 3 months alone, a buying spree that ranks in the top 12% of all periods over the last 5 years. And they're not slowing down. Platforms like Robinhood and E-Trade are seeing growth that's rivaling and in some cases exceeding the peak of the 2020-2021 retail trading boom. And the biggest shift is in options trading. In 2021, options trading felt like it had peaked, averaging around 38 million contracts a day during the meme stock frenzy. But this year, we have actually shattered that record with 48 million contracts daily. And retail traders have never had a bigger seat at the table, now making up nearly 30% of the action. And while that sounds exciting, it also creates a new problem. There's too much noise. People are overwhelmed. They've got Reddit on one screen, CNBC on the other, and 500 different stocks they think they need to follow. It's like the entire market is a crowd of people wandering through the woods, hoping someone else knows where they're going. But that's why I love what you built with the Tesla glitch, because if I were one of those new traders, kind of lost in the noise, trying to find a signal, this strategy would be my roadmap. One stock, one pattern, one strategy that actually gives you direction. So for the folks watching right now, how can they get started, Larry?
Well, Jeff, I actually put together something for everyone to watch. It's a simple playbook backed by 5 years of data, and anyone can use it to start trading this setup right away. It's called the Tesla Glitch Blueprint, a battle-tested strategy to exploit the AI-driven anomaly in Tesla's charts.
Well, that sounds like something I wish I had back when I started trading as a teenager.
Well, me too, Jeff, for sure. It would have saved me years of pain. Inside this report, I break down exactly how the AI algorithms are causing this glitch. I share how my team and I use Z-scores to identify it for normal red trading days. And I explain how traders can set themselves up to potentially profit from these explosive Tesla moves.
And just to be clear, this isn't something people can Google or find on YouTube.
No way. You're looking at the only place this exists. This is a brand new, until now, I've only shared this strategy with a few traders I trust.
Well, I love it, and I appreciate being one of those people. And as, one of the biggest Tesla followers out there, I cannot wait to check it out and do a deep dive into how I could personally implement this strategy. But I also know your Tesla glitch blueprint includes something just as powerful as the trade setup itself, a bonus section that covers what I believe is the real reason that you've lasted over 40 years in this business, which is your approach to risk management. Now, most traders, they chase the next big move, but the ones who last for decades, the ones who build real compounding gains are the ones who know how to protect their capital first. And as we mentioned earlier, you're in the same series as Paul Tudor Jones, Ray Dalio, and Stanley Druckenmiller. But even in that elite group, Jack Schwager went out of his way to highlight something different about you. He said, your success wasn't about prediction or big bets. It was about discipline, adapting to the markets, and elite risk control. And one of your former interns said, the things Benedict does mentally, other people need computers to do.
Blowing up accounts and getting fired over and over will force you to take risks seriously. I had no choice but to get better. I trained my eyes to spot warning signals other traders overlooked. One of my earliest mentors called it reading the tape. And inside the Tesla Glitch Blueprint, I'll walk you through exactly how I do that.
Well, Larry, your track record says it all. 13 straight years without a monthly loss over 3.5%. 20 straight years without a single losing year. Remarkable. I mean, when it comes to protecting capital and growing it, I just don't know anyone better. So you're definitely going to want in on Larry's secret techniques, folks. Plus, Larry's blueprint also explains the simple rule Larry uses to know when it's time to exit a trade, how he limits downside while still giving trades room to run, and how to make money off this Tesla glitch in bear and bull markets, and of course, much, much more. Now, Larry, you also mentioned earlier that everything changed for you when you stopped chasing dozens of stocks and focused on trading just one. That was the real turning point. But the next piece that leveled you up was mastering how to use options. So to help other traders do the same, you put together a report called Larry's Guide to Options. Can you tell us a little bit more about that report?
Jeff, it's really simple. I've traded options for 40 years. I've also been training and teaching others to use them for just as long. In this report, I walk you through the option strategy I used to take advantage of this Tesla glitch.
Well, this is a massive opportunity, folks. You'll learn everything you need to know about how to leverage simple options contracts to increase your returns by 3x to 5x, and even a technique Larry uses to see 10x returns that most retail traders don't even know exists. And most importantly, he'll show you how to structure every trade so the risk reward is stacked in your favor.
That's right. Don't worry, these options are as simple as buying and selling stocks. Anyone can do this, seriously.
Definitely. And from what I've seen, most brokerage accounts already give you access. So if you've never traded options before, getting approved for simple options trades is actually surprisingly simple.
And I'll show you everything you need to know in this report.
It's probably worth pointing something out here. Most of us don't have time to stare at charts all day. They're busy with their jobs, running businesses, of course, taking care of families. They're not sitting around building Z-score models or tracking Tesla tick by tick, trying to figure out whether a drop is just normal volatility or the actual glitch caused by AI algorithms. And even if they could spot it, how would they know which option to buy, how much to risk, and, more precisely, when to get out? What do you say to the folks watching who don't have the time, the tools, or the background in trading, but still want a shot at these types of gains?
You're right. Most traders don't have time to sit around with 3 monitors and track Tesla's every move. That's why every time I identify a Tesla glitch opportunity, I send out an email alert to my private list. It has everything you need: the ticker, the exact option I'm looking at, how much we're risking per contract. It's all laid out step by step.
All right, so now the big question: how do people get their name on the list to receive these Tesla glitch alerts?
I think you're going to like this, Jeff. I send viewers these email alerts every time I find a Tesla glitch trade for free. All I ask is you take my service, One Ticker Trader, for a test drive today.
So by joining One Ticker Trader, people get your Tesla glitch trades as part of the deal.
You got it. One Ticker Trader is where I share my top trading ideas every single month. These are the highest conviction setups I'm seeing across the market, and that includes every Tesla glitch alert I'll send out. Now, obviously, nothing is guaranteed, and I don't win every single time I make a trade. But in 2025 alone, we've won on 24 out of 27 trades. And since I started One Ticker Trader 3 years ago, the average return on each trade is over 10.1%.
Well, that's impressive. You're definitely still at the top of your game, and I'd put that track record up against anyone in the world right now, especially in this kind of market with all the chaos that we've seen. So people are getting your trade setups, the Tesla glitch alerts when they hit, and your hedge fund level analysis and research.
Exactly, all of it. And when I send a trade alert, it's not just a vague idea like Tesla might go up. You get the contract, the price range, and the trade plan, everything you need to take action.
Larry, at nearly any price with that track record, I mean, this sounds like a no-brainer. Guys like Richard Dennis, Stanley Druckenmiller, they're all market wizards like you, but they're not out here sending everyday traders their best setups. You are. You're actually doing it. Live trade recommendations, real-time alerts, the whole package. And from what I've seen, One Ticker Trader usually goes for $499 a year. Now, is that what new members will be paying today?
Jeff, first off, I really appreciate you making the trip down here. You are one of the busiest people I know. I haven't been this fired up about a trading opportunity in years, and I don't want to slow down. I want to keep this thing moving and get it in the hands of everyday people, people who can actually use it to make a difference in their lives. That's exactly why I'm not going to ask people to spend hundreds of dollars to access this research. So I am doing everything I can to make this affordable for people today. And I'm going to offer a big discount on my One Ticker Trader service to do it. Instead of paying the normal $499 annual price I mentioned earlier, those that choose to join me today can get access to One Ticker Trader for just $149. That's 70% off the retail price.
All right, so you're offering an incredible price to get Actionable trading recommendations from a man who had 20 profitable years in a row. And according to Barron's, is one of the top money makers in the entire world. What an excellent opportunity.
Well, I appreciate that. And I know some folks watching this don't know me personally. Maybe this is the first time you're hearing my name. So I'm making this whole thing 100% risk-free for the next 60 days.
All right. So, Larry, you're giving people a full 60 days to check everything out: the Tesla Glitch Blueprint Report, your real-time Tesla Glitch trade alerts, and your step-by-step guide to options, and all the research, all of the trade recommendations, and special reports inside One Ticker Trader. And they can follow some trades, get a feel for how you operate, and if it's not for them,
Well, just call my support team and they'll send you a full refund. I'll even let you keep my special reports. They're my gift to you for giving my research service a try.
well, that's more than generous, Larry. And I have to say, the one thing that surprised me about you is that you're still at it, still passionate about trading after all the success. I mean, after all these years, you are still trading full time.
You bet. I still come into this office every day, the one you're sitting in right now, and work alongside my team. We're in the markets every single day. Sometimes we're here past midnight. You can ask a few of my guys. We've pulled all-nighters when the setups demand it.
Yeah, there aren't many guys who would do what you do after all the money and trophies on the wall.
Well, thanks. I do this because I love it. I live for this. But I also know what it can do to help people. And that's why I built this service. So I hope you'll join me today. I'd love to welcome you as a new member of the One Ticker Trader.
Well, in that case, please don't wait, folks. If you've been looking for a real edge, something simple, proven, something that's repeatable, this is it. Click the button below to get a final look at today's special Tesla Glitch offer. It's been a pleasure, and just remember, Larry's already watching Tesla, waiting for the next glitch to appear, which could happen at any moment. So please don't wait and risk missing out on it or the opportunity to join him on this venture. And thanks again, Larry, for sharing such an exciting strategy.
Oh, I appreciate it, Jeff. Thanks for coming down. I hope those watching will take this opportunity today. I'm confident it will deliver outstanding results. As I like to say, let's put a P on the page.